Hello, and thank you for joining us today. I'm Taylor Combluzier, a mining analyst at Red Cloud Securities. Today's webinar features Nicola Mining. Nicola is a copper explorer advancing its fully permitted new Craigmont Copper project near Merritt, British Columbia. A 5,000-meter Phase 1 drill program is underway. In addition, Nicola recently finished commissioning a state-of-the-art mill at the new Craigmont project and expects to generate cash flows processing third-party ore. The company also owns 100% of the Treasure Mountain silver property, which includes 30 mineral claims and a mineral lease spanning an area over 2,200 hectares. Today, I have with me on the webinar Peter Espig, who's the President and Chief Executive Officer at Nicola Mining. The format of today's webinar will be comprised of two parts. In the first part, Peter will provide an introduction to the company. And then in the second part, we'll take your questions live. So please use the chat to submit as many questions as you can. And I'll note you can type them in at any point throughout the presentation. To start, we'll handle the disclosures and then get into the presentation. So for Nicola Mining, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Nicola Mining specific disclosures. So with that out of the way, I'll turn it over to Peter to discuss Nicola and what you have to look forward to with the company.
Thanks for the introduction. And first of all, thank you everyone who is listening to this presentation. I know we're coming off a long weekend, Labor Day, and so now it's time that I guess we can all start laboring again. This, I assume you can all see the screen share that I've done here now. So this presentation, so I'd like to just go over this presentation in 15-20 minutes and then open it up to questions. I don't want to take too much of your time. I know it's a busy day. So really, Nicola Mining, it's a very unique company, and we offer a very unique investment opportunity because we combined key metal upside via exploration, significant upside, but we also have stable operational revenues that provide stability to the company. So I'll begin with our strong operational cash flow. And I always go back to, I like a Japanese saying that says, turkeys fly like eagles in a typhoon. And, you know, when the markets are good and there's a lot of capital available, that platform of raising money, drilling, raising more money, drilling works very well. But that doesn't work well when markets are tougher. And so coming from a distressed banking background, we've really focused on making the company self-sufficient. So we have operational cash flow from our mill, our gravel pit, and a rock quarry. I'll talk a little bit more about that later. We do produce gold concentrate as we speak right now. The mill is built to produce gold and silver concentrate. It is a very unique and state-of-the-art asset. And our key asset, our flagship asset, is our Craigmont Copper. And we also, as was mentioned, have a fully permitted silver mine. This is the 5 key diversified assets that we have, but I'd like to highlight that these are synergistic diversified assets. So a lot of junior mining companies have diversification asset holding, but when you're small, you need to have synergies between these assets, and this is exactly what we have. So starting with the new Craigmont Copper project, this is historically the highest grade copper project in the history of Canada, perhaps North America. It is a high grade, the mine was a high grade copper skarn. We have a multi-year, 5-year exploration permit that commenced last year. And we're beginning our exploration for this year, which is 3 identified targets. We're very excited about this. I'll talk about this later. We have a state-of-the-art mill. It's a $30 million mill, flotation, gold, silver. We're currently producing. And then we have Treasure Mountain. And back in 2012, Nicola Mining, which was at the time Halder Silver, without the copper asset, had a market cap of 230 million, and it was based on the mill and the silver mine. The silver mine's currently in care and maintenance, but we have the ability to reopen production. And being creative, we have a sand pit, a gravel pit. We also have a rock quarry, and as you see here, we are going to be completing the production or construction of a cement, concrete, or ready mix plant on our site, and we have that in a partnership with First Nations, which benefits because it benefits our relationships with First Nations, but it also provides key contracts with government ministries that we wouldn't normally have access to. And we have a 75% economic interest in Dominion Creek, which Dominion Creek is a high-grade gold asset in northern British Columbia. We've applied for a bulk sample permit, and that bulk sample permit would then be shipped to us. So key here is location, and the real estate term is like location, but there's a lot more to it than that. So one thing about British Columbia, yes, it's politically stable, but there's also a knock on, it's a very difficult place to get permits. So, but this benefits us because we have a copper mine permit, we have a mill permit, we have a silver mine permit, we have a rock quarry permit, we have a gravel pit permit. So we have 5 permits for our operations, and these are all in situ. This gives us a very strong advantage when it comes to bringing assets into production. The other thing is we're right in the middle of established infrastructure. So Highway 8 was actually built for the historic Craigmont mine. We have access to power, and we're located just outside of Merritt. So we have a working community that is also skilled. And you can see here how the Quesnel Trough, our terrain, goes right through our site. We're kind of at the thickest part of where that Quesnel terrain is, and that's where we're doing our exploration. So beginning with the mill, and this is important. So the Merritt Mill is the only facility in British Columbia permitted to receive material from anywhere in the province, gold and silver. So our permit reads, Nicola Mining has the right to accept and process mill feed from anywhere in the province of British Columbia, subject to notifying the Ministry of Mining 10 days ahead. That's a very, very powerful permit to have. And one of the reasons we're able to, and this slide tells a lot, but one of the reasons our permit that reads that way is that, as you can see here, we own the land freehold. So what we did is we spent, in order to get the permits that we have with the rock quarry and with the cement plant, and we spent 4 years changing our permit, which is typically having to reclaim it back to traditional graze land or wildlife usage. Because we own the land freehold, we created an industrial site. So we're the province's only mining industrial site, and that allows us to do industrial activities. And if you look at the slide on the left, here you can see all these dots, and you can see, the ones greater than 5 million tons, the big red dots. Those are mines, are either historic or producing. And then as you get to the smaller dots, less than 1 million tons, all those white dots represent a gold project that has a 43101 known gold resource, but they don't have mills. And so I like to conceptualize them as being airplanes, and we're the airport. So we see a lot of potential in continuing to enter into these profit share agreements with these companies. We also have a strategic partner with several key junior mining companies, including Blue Lagoon, Osisko, and Talisker. But stay tuned for more news coming as we enter into additional agreements. And one of our key investors is Ocean Partners, which is a global trading firm, and they see our entity as well. So they see our mill as a project generator for the province, and we have the ability to expand and to ship globally. So this is our flagship asset here, is the new Craigmont. Again, it is a fully permitted mine site. So that, as we all know, that, you know, having a 43101 is very different than having the ability to go into production. It typically takes in British Columbia 14 years to go from your application to actual production. That's close to the global standard. So this is greatly expedited because of the strength of our permits. We have excellent infrastructure. Mentioned we're on Highway 8. We are connected to power, so our mill runs off. We don't use any fossil fuels to run our power. We use BC Hydro. Historically, there was 900 million pounds of copper extracted, and you can see here that we are adjacent to Highland Valley, and in an area that has great infrastructure. We also have great water permits as well. Without getting into too much detail in the past, I think the big takeaway here is I always like to try to understand why an asset or an opportunity exists. So you look at the historic mine, it basically, it operated from 61 to 81. When they closed the mine, they closed it, leaving in situ approximately 500 million pounds of copper. They closed the mine not because it ran out of copper, but because in 1982, copper prices was 60 cents per pound, and it cost them 61 cents to extract. However, it wasn't until, if you look on the right, it was not until November 19th of 2015 that we were able to consolidate the entire ownership of that project, because there were 7 owners, including Nicola. And so, you know, it's very difficult to run a company or to conduct exploration when you have 7 people who are able to vote. So up from 1961 to 81, the mine operated. From 81, basically up until 2015, there was no exploration. And that's why this exciting opportunity exists. So here again, you see where we are in, you know, in relationship to Highland Valley and New Afton. You can see here the different types of rock formation. And if you can look at my cursor here, you see this fault. This is the Lornex fault. This is the fault that is the driver of the copper mineralization in Highland Valley. And you can see how the fault goes from here, then it separates, it goes to there, and then it goes up again. And this is just because the fault has been moved through various geological displacements. In 2019 was the first year that we noticed we drilled a hole, and it was just to see, it was more to understand the relationship between the Nicola unit and the Guichon unit, where Highland Valley is. And when we did that drill hole, it was the first time we saw porphyritic type of mineralization. I'm gonna, again, this part here, this talks about the Maya, but the key takeaway of this slide here is that we drilled between 2016 to 2018, and then in 2019 we started focusing on, okay, we started believing that, you know what, we have a really exciting project here. So we applied for a MIAB. We worked towards applying for a MIAB, and we didn't get the MIAB. We waited 2 years. So we received that MIAB in 2022. From there, we then focused on doing geotechnical work, which included a IP survey and a ZTEM survey. And it was not until after that that we really decided that we were going to do this 2024 exploration program. What you see here, and this is the type of grades that we can see on our project. So this DTH0 number 2, that was the first hole that we drilled. And we drilled that based on our knowledge of how the faulting worked and from an outcropping. And you can see the very first hole that we're able to drill had almost 86 meters of 1.1% copper. We kept drilling, and then the last hole, this is in the embayment zone, in the West Craigmont zone. The last hole we drilled in the zone had 101 meters of 1.33% copper. And then we stopped drilling there and we just started drilling in other areas. So you can see CC 1802, that again, 76.6 meters of 1.05% copper. So the grades are there. And that brings us to this current program that really started last year. And last year, the purpose of last year's drill program was to really understand whether or not the pit continued eastward. So we drilled 4 holes there, and we found out that the mineralization of the historic pit didn't go eastward. And then we did 2 holes north of the historic pit. And there we encountered never before seen moly coinciding with chalcopyrite, which is very indicative of the type of mineralization we see at Highland Valley. And we're currently working with the University of British Columbia including our drill program for this year. So this year, getting to this year, why are we so excited? And these slides are the key slides of this entire presentation. So what you can see here is you can see the Marb, Kaz, Embayment, Craigmont. So the embayment is the area where we had the 2 holes that I've mentioned, 86 meters of 1.1%, 101 meters of 1.33%. But you can see a trend here. You can see these blobs of mineralization through the MAG-MV model. And then you can see an outcropping at the Marb and also the Kaz. So this is a culmination of several parts here. So if you look at the historic pit, and I'm going to zoom this up. So if you look here at the historic pit, here's what we can see. We can see all these drill holes. The very first drill hole that they did into the center of the historic pit was, at that time it was in feet, but it was 600 feet of 4% copper. And then you can see all these drill holes around here, but you can see outcropping, and it was based on an outcropping back in the 1950s that they drilled. And then at the widest part of the historic pit, it was cut off. And what they did is they drilled on the other side of the fault where you see this drill hole here. Here they drilled towards but what they found is that there was no mineralization on the opposite side of the fault, exactly where the pit was, where they were hoping that they would have in additional mineralization. But that was found because of an outcropping. The embayment zone is where we drilled. So you can see the holes that we drilled there. You can see this is where there's a very small outcropping we drilled. You can see that it's open down. The longest hole that we drilled here, the 1.1% over, or 1.3% over 101 meters. And we can see that. So the mapping lines up perfectly with the anomaly. What you can see here at the Marb is you can see in 1961, these 2 drill holes that were drilled, and they're both targeted towards the pit because the Marb was to the western side and they drilled eastward towards the pit. Well, you can see here is a large outcropping, and you could see the photos in the previous slide. That outcropping was found in early 2000s, and that was there because of a logging road that was built that now, when they bulldoze for the logging road, they expose this outcropping, and that's what we can see. But you can see that neither of those holes drilled into this anomaly, and that's what our next target for this drill program is. And then as you go over to the Kaz, again, this is very exciting, is you can see these 2 drill holes. Now, we don't know what the grades are, but you can see an outcropping here. They drilled towards the anomaly. And again, these holes were drilled in 1961. What happened in 1961? They were drilled by BQ drill, so very small drill that couldn't go very deep. They ended in mineralization, but that rig then moved towards the production. So that was the key rig that was used towards the production. So this is our second target. So we will be drilling these 2 targets over the next month. And you can see here where they are aligned. So here's the Marb, here's the historic pit. This is the embayment. It's a small anomaly right here, but it's already been drilled and it's been proven to have mineralization. So this is the key targets that we're going to be drilling over the next 2-3 weeks or 2-3 months. We also have the 5-year permit that will allow us to continue drilling over the next 3-4 years. We're permitted to drill 190 drill holes and do 12 kilometers of trenching. We also have a 43101 on the historic waste dumps because the historic cutoff grade was 0.7%. So we're going to spend a little bit more time understanding exactly, because one of the things that we noticed is that we weren't able to, in the RC drilling, recover the fines, which is 50% of the weight in the waste dumps, and we're finding the fines seem to have a higher grade, which makes sense because the chalcopyrite, or the mineralized rock, is actually more brittle than the host rock. So we're going to be testing, and we hope to then update our 43101. Treasure Mountain, again, this is a high-grade silver project, a fully permitted mine that we have the ability to reopen. You can see where it is in location to the Merritt Mill and the Craigmont. So it's a 90-minute drive from here to here, and that was how the purpose of the mill initially being constructed. Portal 1, so when we look at what's remaining, so within Portal 1, Level 1 Stope 2, which is the largest stope and the highest grade stope, is actually still in situ, and that's something that when we closed the mine and put into care and maintenance, we did that because at the time in 2013, silver prices was $14 an ounce, and the Canadian dollar was $1.05 to the US dollar. So now this is something that we can continue looking. But what's really exciting is the backside of the mountain, and so this is some of the surveys that we did, and there's a vein that is exposed on the backside, and there's never been a drill hole. But if you look at sample 2100207, you can see that there's silver, there's gold, there's copper, there's lead, there's zinc. So we're very excited about the prospects of the backside of the mountain. And we recently announced on Friday that we received a 10-year mine extension, which is very significant. We've also submitted, again, a 5-year exploration, a MIAB program for the project, because it's a little bit of a forgotten asset because of the size of and the potential upside of the Craigmont, but this really is also a standalone asset for the company. The team, so there's myself, Peter Espig, come from a distressed turnaround background, although what's unique about my background is that I spent 8 years as a driller, all the way through high school into and through university. Will Whitty joins us from is a great geologist who joins us from Barrick Newmont, and he actually moved to Merritt. Kyron Liu is a PhD from Colorado School of Mines. Sam Wong is our CFO, and you can see our board here is very strong. Dr. Paul Johnson was a principal geologist at Teck. Malcolm Swallow is one of the top mining turnaround specialists, putting things out of distress into production in the world. He's now retired, but he provides great insight. And Brent Almond was the CFO, is now the CEO of Ocean Partners. So a very solid team. In summary, we're a company that has operational cash flow, a diverse asset portfolio, but synergistic. We have the right management in place to maximize and extract the value of our assets. We've got a fully permitted modern mill. We have a flagship asset, which is a new Craigmont Copper project, and we have Treasure Mountain, which is a fully permitted silver mine. And that's all. Thank you.
Perfect. Thanks a lot, Peter. Just let me pull this up here. All right, perfect. So yeah, with that, we will turn to the Q&A portion of the webinar. And just a reminder to everybody on the line that you can type your questions into the chat box at any time. So to start off, we have a few that have come in. first one here. Which project is your priority?
So that's a great question. So the priority is the Craigmont Copper project, but just as important is the Merit Mill and our operational cash flow, because as I mentioned, like, I come from I recognize that debt is not good and not having cash flow is also bad. So we prioritize the cash flow, our operations, to support our flagship asset, which is the new Craigmont project.
Okay, and then kind of a follow on here. Why not restart production on the Craigmont mine?
Well, so the Craigmont mine is a very large project, and so you would need a larger mill. B, so there's a difference between a mill size for copper and for gold and silver. Second is that the key point here is to have a new discovery over this year and into next year. So going into production of the old doesn't make as much sense as having a brand new discovery and then consolidating the entire copper at that project, because a new discovery, it's always easier to mine a new discovery than it is to go back and reopen an old mine. But it makes a lot of sense when you combine them all together and you have a very large resource. So that's the philosophy of the exploration programs that we have.
Okay, perfect. We have one here just wondering, I guess, on a few numbers in terms of working capital, number of shares, and market cap.
So the market cap is somewhere between $55 to $60 million. We have 160 million shares outstanding. If you look at the way Nicola, our earnings work, is that we're second half heavy. So our cash flow increases in the second half of the year. Projects begin we start receiving material in spring, and there is a delay between costs and cash flow, right? Because we mill, we produce, we then wait until we have a amount stockpiled, we then ship it, and then we get paid. So there is a delay. So we expect to have a strong cash flow in the second half of 2024. But I think where the company is going to change going forward is that we see our cash flow starting much earlier in 2025. So we see a lot greater stability. And one of the things that is both from milling, but also we're completing the construction of a ready mix plant on our site. So that the combination of having the ready mix plant with the rock quarry and the gravel pit allows us to get more contracts with the ministries, and the production in 2025 we expect to be earlier.
Great. Okay. Similar question here. Just wondering what your burn rate is and how much cash you have on hand, and if you'll need to raise money in the near term.
So it's I love that question, because I always say to, and a lot of people ask that, but you don't have a burn rate when you're generating operating profit. So we've had a burn rate in the first half of the year, and then that burn rate disappears and goes to cash replenishment. So we don't need to raise money. We're financially stable. It doesn't mean that we won't raise, like, if we see something exciting, it doesn't mean that we're not willing to, have a right partner or do some additional fundraising specifically for the exploration. But as far as having a burn rate for our operations, we have enough stability that we would be able to even fund exploration through our operations. But If we wanted to increase the speed or expedite our exploration, then we could look at that. But we're financially stable, so we don't need to raise capital.
And I assume part of that's a function of the market, as well. If it's a hot market and sure, everybody's doing well, then you might be willing to accelerate things.
Yeah,
or
no, that's not correct. So if the markets are doing well, and you don't need to raise money, you're still going to do better. So I think what it is do we see something exciting enough to justify expediting our exploration? So that's the key term, I would say.
Okay, another one here. In your most recent news release, you showed several core pictures. Could you explain the significance of these? I'm not sure if you have those in the presentation or not.
No. So the significance of that, so the reason I specifically didn't put it in here is that because we haven't gotten the assays back, but there is there are three significant takeaways. One is that we see a level of alteration, so propylitic alteration, very high up at surface, and what we haven't tested for previously is the ability of, or whether that or not that contains gold, because what we talk a lot about the copper grades, but we also have there's a lot of magnetite associated with the copper, and then historically the Craigmont mine also did produce gold, and we don't know whether or not there's gold contained in there. So but there's a potential. So I'm not gonna talk too much about it, but we're in a trough where we have both gold and copper, so we're close to New Gold, and we're also close to West Haven, which is a gold project, and we can see each other. So the second thing is that we've seen copper grades, so we're seeing very clear where the copper is contained in veinlets, where it's not like massive sulfide, but it's in veinlets in calcitic veins, which is what you would see in a porphyry. So the type of mineralization we saw in the first three holes, but remember that the first two holes were just trying to understand the type of lithography that we had. We were surprised to see that much of pyrite that we saw, which is exciting. The real first hole that we did, like we did the hole 3 and hole 4, in those holes we saw exactly what we were hoping for, where we saw an indication that we're in a porphyry system. So that's the significance of those first three.
Perfect. Okay. Then see here.
Thanks, John, for that question. I see who wrote that question. So good question, John.
Got one here. Can you update us on your relationship with Nitetsu Mining and the LOI?
So we continue to work with Nitetsu. So there's two things. So we have an LOI. So what we did is we can't, I mean, this is public information. So we canceled the LOI, but we've kept our NDA. So we are working with them. We communicate with them. And I think that the project has changed somewhat in magnitude. So because when we announced the LOI originally, we didn't have any information. We had not had the ZTEM yet. We also did not have the IP survey. A lot of the mapping, like the whole superimposition of everything, all came after. So we believe that the project is much stronger now than it was at the time of the signing of the LOI. But we certainly do communicate with them, but others as well. This is not the only NDA that we have. So just clear that there are other groups that we are discussing with.
Perfect. Okay. I don't see any other questions, so maybe I'll just put out a last call to the audience for any final questions, and I'll give you, Peter, an opportunity to kind of give the final pitch for Nicola and, you know, maybe the one or two key takeaways you want to leave with investors. Maybe if you want to give those to us now, Peter, while we wait for the questions. Yeah.
Well, the takeaway here is that we have a copper project and that is unique for several factors. A is that typically projects have been explored. So understand that there was no exploration between 1982 to 2015. And from there, what we did is we spent a lot of time and effort, and we were able to do that because we didn't fall into the drill, raise money. Because we had the cash flow, we were able to do all the work, the geotechnical type of work prior to putting, you know, steel in the ground. So now we're right at this pinnacle where we expect to have very exciting momentum with regards to our drilling exploration. That's the copper asset. On the operational side, I think it started last year where we moved towards you know, solid cash flow, operational profitability. I think where we are now is we've continued. Now you're going to see, we expect to have a very successful second half of this year. But now that brings us into visibility into future years, and we expect that to become even greater. So, you know, it's very exciting to have a company that is self-sufficient, has a strong balance sheet, and has this incredible exploration upside on the copper. And don't forget, as I mentioned, also the silver, because it is somewhat of a forgotten asset. There's a reason why we applied for a 5-year MIAP, for a 5-year exploration permit. There's a reason why we extended that life of mine for another 10 years. So we're well positioned. We've got a copper mine that is permitted, a silver mine, and a mill that is fully permitted for production.
Perfect. Okay. With that, we have had a couple questions come in the last minute here. What is the, I guess, cadence for drill results, and, you know, when should the investors expect to see more?
So the drill results, so we submitted them to the lab, and we're just waiting for results. So this I would say another 6 weeks, and then from there we'll have we'll provide additional information on the current program, which is targeting the Marv and the Kaz.
Right. Perfect. Okay. Yeah, we had another one come in. I'm not really sure you can say much about this, but have you had any discussions with North American majors, RE joint ventures, etc.?
I could just say yes, we have, and I can't say who because we have NDAs.
Yep. Perfect. Okay. Okay. With that, I think those are all the questions that we had in. So that's a good engagement by the audience there. And we'll leave it at that. So thank you very much, Peter, for introducing us to Nicola Mining this afternoon and hosting the webinar with Red Cloud Securities. And thank you to everybody on the line for tuning in with us today.